to the video, guys. Hi. Today we're gonna talk about
Talk about candlestick patterns, bullish and bearish patterns. We're going to explain to you their meanings and their uses that they have, because the truth is that most people don't know the importance of them. If you use them correctly, your analysis and your trades will start to pay off. So let's start with this video. What is a candlestick pattern? Well, let me tell you what is a candlestick pattern. There are many ways to read any chart. As you can see clearly here, there are bars, candles, hollow candles, hiking ashi, line, area, baseline, Renko, and so on. So you're probably thinking, which one is better to use? Well, if you ask me, I say to you, Japanese candlestick patterns, because it's easy to learn and it works. If you are watching this video, it's because you want to learn about this topic. So I'm going to teach you everything you need to know about candlestick patterns and how to trade it like a huge investor. I'll skip the other ways to read the charts because we don't really need them too much. Later in other videos I will cover them in depth. I will put them in the description below. So let's start this video. A Japanese rice trader called Monehisa Homa, I hope this is the right pronunciation, well, he created this kind of thing during the 17th. It was introduced to the Western world by Steve Nissen in his book called Japanese Candlestick Charting Techniques. I will explain it just like that. Japanese candlestick chart is the way of reading the charts, that's why it is called Japanese candles. But how can I read or at least get the point? Well, every candlestick pattern has 4 data points. Here we have in this slide the 4 data points, that is open, the opening price, high, that is the highest price over a fixed period, the low, the lowest price over a fixed time, and close, the closing price. As you can see clearly here we have both examples of a bullish and a bearish candle. You can see in the picture where was the open in a bullish candle, and then the close, and here we have also the low and the high, that is like the shadows. Hey, I hope you are taking notes because it is not only hearing. Some good notes would be, for a bullish candle, the open is always below the close. For a bearish candle, the open is always above the close. Let's go into the patterns. In this video, I am just going to cover 4 bullish reversal candlestick patterns. Bullish reversal candlestick pattern means that buyers or bulls are in control. This first pattern is called in this way because it is a 2-candle bullish reversal pattern that forms after decreasing the price. Let's look at the example here. Here we have this huge candle that is a bullish engulfing candle. As you can see clearly here in this beautiful example, here we have a downtrend. The price made an incredible double bottom, and after that, the price just made an incredible bullish engulfing pattern. And after that, the direction of the market just changed. So this is the bullish engulfing pattern. The next candlestick pattern is called hammer. It is called this way because actually it is a hammer. You can see the weakness of the candle. Maybe at the open of this candle the price went down, and after some minutes the candle became a bullish pattern forming this hammer. This pattern means that the buyers are getting more control of the market and it may change the direction of it. The next one is piercing pattern. It is a 2-candle pattern. It is formed by a bearish candle and a bullish candle. The bullish candle closes above 50% of the bearish candle, like you can see in this clearly example. Sometimes there is a gap between these 2 candles, but let me tell you something, this is more common in the stock market. If we are talking about forex, this is more uncommon. Let's see a perfect example of this. There was a downtrend, and after that 3 incredible bearish candles, bearish huge candles. So after that the price wanted to form an incredible pattern, like this pattern that is called piercing pattern, piercing line, What I mean is to change and to start to buy positions, alright? Morning star. I love this pattern because it is 90% of accuracy, but just if it's combined with other strong signals, alright? So it is formed by 3 candles, a bearish candle, a variation of doji, it could be a bearish or bullish, it doesn't matter which one, and a bullish candle. It is a large green candle. Now we go to the next part, that is bearish candlestick pattern. We are going to cover 4 of them: bearish engulfing candle, shooting star, dark cloud cover, and evening star. Alright? So let's start with the first one. Bearish engulfing pattern is a 2 candle bearish reversal candlestick pattern that forms after an advance in price. In essence, a bearish engulfing pattern tells you the sellers have overwhelmed the buyers and are now in control, alright? So here we have this example, uptrend, and after this uptrend appears this beautiful bearish engulfing candle that engulfs the last green candle, and after that the price and the conditions of the market just change. Shooting star. A shooting star is a 1 candle bearish reversal pattern that forms after an advance in price. It has a shadow. The price closes at the bottom. The upper shadow is about 2 or 3 times the length of the body. And this is what a shooting star means. When the market opens, the buyers took control and pushed the price higher. The selling pressure is so strong that it closed below the opening price. In short, a shooting star is a bearish reversal candlestick pattern that shows rejection of higher prices. A dark cloud cover is a 2 candle reversal candlestick pattern that forms after an advance in price. Unlike the bearish engulfing pattern, which closes below the previous open, the dark cloud cover closes within the body of the previous candle. Alright, so thus in terms of strength, the dark cloud cover isn't as strong as the bearish engulfing pattern. The first candle has a bullish close. The body of the second candle closes beyond the halfway mark of the first candle. Okay, so let's see at this example. The first candle has a bullish close. The body of the second candle closes beyond the halfway mark of the first candle. The second candle closes bearish, as you can see clearly here. And this is what a dark cloud cover means. On the first candle, the buyers are in control as they close higher for the period. On the second candle, selling pressures stepped in and it closed bearishly. More than 50% of the previous body, which tells you there are selling pressures around. So last but not least, we have the evening star. An evening star is a 3 candle bearish reversal candlestick pattern that forms after an advance in price, alright? So actually an evening star means, so let's see this beautiful example. On the first candle, it shows the buyers are in control as the price closes higher, alright? On the second candle, there is an indecision in the markets as both the selling and buying pressure is in equilibrium. That's why the range of the candle is small, alright? On the third candle, the sellers won the battle and the price closes lower. I'll explain it better to you. The first candle has a bullish close, alright? The second candle has a small range. The third candle closes aggressively lower, more than the 50 of the first candle, as you can see clearly here in this beautiful example. In short, an evening star tells you the buyers are exhausted. These examples give you a better understanding of the condition of the markets. As you can see, here we have a head and shoulder chart formation. I really love this kind of chart formations. This chart formation predicts a bullish to bearish trend reversal. The head and shoulder pattern is believed to be one of the most reliable trend reversal patterns. It is one of several tough patterns that signal, with varying degrees of accuracy, that an upward trend is nearing its end. I will cover this chart formation in another video, so stay tuned, you don't have to miss it, alright? Well, by now you have learned 4 bullish candlestick patterns and 4 bearish candlestick patterns, alright? So the next step is to put all of these video in practice. What I mean is to go to your charts and find them, at least 1,000 of them, like someone once said, more practice, more gains. So I dare you to do it. When you go to the charts, try to see what happened after these patterns appear. Try to see every single candle closely. see the support and resistance, trend lines, and do your analysis as a pro, alright? Well, that's pretty much for this video. Thank you so much for watching. I hope that this video was able to give you the right information about the topic. Like this video if you like it, subscribe to my channel and leave a comment below. See you later, trader.